The market crashes we've seen across Bitcoin and the US stock markets have been the largest in 3 years. We've got 10.5% for the SP 500 and nearly 30% for Bitcoin. But there is an additional signal that hasn't shown up in about 3 years, and it's showing up again. Now, there is a little bit of hopium to this particular signal, and I'll get to that in just a moment as I explain how it shows up, what happens, what it means for Bitcoin and for the stock market. So let's dive into that in today's video. Like, subscribe to the channel if you are new here. There are about 30% of you that still haven't subscribed yet. Now is a fantastic time, as I'll show you with the chart data that we're looking at in today's video. Along with that, if you have subscribed to the free crypto and economic report, you should have received that yesterday. Go check your email inbox and of course your junk mail as well. All right, guys, let's kick straight off with the S&P 500 down 10.5%. And as I said, for the Bitcoin price, nearly 30% down. Some short-term stuff here with BTC before we dive into the longer-term hopium-esque info that we've got coming up for you. The price targets here, still looking at $86,000 for BTC to consolidate above before it then tackles the next levels, roughly the low $90,000 level. You could say 89 being the previous swing bottom low in January. We're looking at the top here at 95,000, but the 50% level comes in at 92,900. So essentially that low to mid 90,000s is really going to be the key here for Bitcoin to consolidate above so it can tackle the all-time high. Now I'll get the crypto data out of the way first. First being the exchange volume, which has dropped again, putting in a new low here. So this seems like we're still going around that churn in search of a low, similar to what happened in 2024. And we've seen this pop up as well in previous cycles. You can see within this cycle, you got 2023, the exchange volume hitting fresh lows and basically just grinding around at lows after some big pumps to the upside. And in the previous cycle, the same sort of thing happened again. The exchange volume begins to drop off because people lose interest. They stop following their plans. They sell up everything and they just get sick of being in the markets because basically they've been destroyed on the way down. Speaking of destroyed, the liquidation data has continued to, well, it hasn't necessarily increased, but we're starting to drop off here as well. So there's less and less activity and less investors and traders in these cryptocurrency markets. And that's what you can see with the liquidation data. There is less volume on the exchanges, less liquidations, and the fear and greed index is still sitting around fear. 32 today, 34 yesterday, 34 last week, and the grind here for the sentiment continues to look like we're at some sort of low. I'll show you that on the chart as well, as we've got a time frame that we're watching here to essentially refresh, reset the market, and it happens time and time again. You might have seen that on previous videos. We're looking at that 4 to 5 month period. Google Trends is also grinding lower. In the last 12 months, as you can see here, we're looking at the worldwide search for crypto and Bitcoin. Crypto's at 15, and the previous lows were at 12, going back to October just before the election. Bitcoin was sitting at 26. The previous lows for Bitcoin are at 34, currently sitting at 38. And if we take this back about 5 years, we're still putting in higher lows, even though this grind takes some time. As I often post about on X, it's about patience. The game is about patience and being there when the opportunity presents itself. And that's pretty much what this period is about. Often everyone leaves, they get sick of it, they enter the market when it's at its peaks, through November when it's exciting, December when it's exciting, January in the complacency, as we can see now. And of course, we can see this in hindsight when it comes to the emotions. You get a sense of it at the time, maybe you did, watching the news come out, the X posts from Donald Trump, from the president, the memes coming out, and the price for Bitcoin, which is a really great barometer of the overall space, really wasn't going anywhere. Just kept hitting its head at around the mid 100s, 106, 105, 107, with a few minor brief moments at 108 and 109 when it's some of the biggest news, and it just really didn't go anywhere. And then you start to get a lot of lower highs continue to form. So that's why we're watching some of the lower term timeframes to hit first, 86K, then roughly around 93 to 95K. And if Bitcoin can do that, well, then I think we've got a much better chance ahead. We've got some big warning signs to talk about, some stuff that we haven't seen for 3 years. That comes in with the S&P 500, down 10%. We've seen a small rally here. And if you watched yesterday's video, I was looking at the S&P 500 on the E-mini futures with 1, 2, 3 days up on the futures. But that is different to the S&P 500, the spot market here. And so this one here is your contract rollovers. Don't worry if it doesn't make sense, but we did look through the 3-day up signal from some of these lows and how they tend to put in a new low or a higher low. So either way, it looks like we're bumbling around some sort of period here where a low is forming. And that leads me to a major signal. One of the major ones here we're looking at is recession. This has come up so often in history. You've got peaks in the search volume for recession worldwide. So we're looking at this around the globe, 2004 to present. So this takes in recession talks back around the GFC, before the GFC, during the events that unfolded, and then after the GFC. And then, of course, everything leading up into this one here was the COVID correction. You see on the dates here, that's June 22, sorry. This one here is the COVID correction. March, this one here was the peak inflation fears and recession fears. And here we are again. This is pretty significant search volume. Now, of course, this is 2004 to present. Let's take a look at it in the last, say, 5 years. It's still going to be an up bar, but you can see it starting to drop off. And in the past, when this has dropped off, it's either shown up as being a low or the low is coming up quite soon. Okay, so we'll take a look at that on the chart to see where it shows up. Now, I'm going to do it on the monthly chart. And each of these arrows is what we just looked at here with the search volume for recession going back through the entire Google history. So it's 2004 to present. And I've got a couple of the significant ones in the earlier days. So you're just looking at the low to the high there. That search volume would have been quite significant at the time, but of course it can only measure up to 100 and judges everything based on the entire history. So the most search history for recession was, where are we at? March 2020. You can see this is April. There it is, March 2020. Just believe me, that's where it is there. You can go and check it out for yourself. Now, the other highest times were June 2022 at that low, and then also October 2008, which was just after or during the Lehman Brothers collapse for the GFC, global financial crisis, that led to that low 54-ish% crash on the S&P 500. So this is to that low that we see in March of 2009. There it is, 57%. And those are essentially the 3 significant areas. That top, the COVID point, and then the search volume for June 2022 when we had the bear market in 2022. So 3 years ago. Now, as I showed earlier, each of those times when it comes up and you start to see the search volume for recession drop off, it generally highlights a pretty significant low in the market. Take August 2024 as an example. There's the top there. The search volume for recession dropped off. And I'm bringing this up here because this is quite a significant reading for the search term recession. You know, I've heard all about it in March with Trump and these tariffs and the Atlanta Fed news that came out that they were expecting a recession, either, you know, to talk about it next quarter or coming up in 2025. Maybe Trump is artificially manufacturing weakness in the economy. Maybe he's trying to manufacture a recession now so that this administration can bring in more of their own changes to what's going on. Who knows? That's all speculation, and we can leave that for other speculating channels that focus more on talking and making more of a soap opera out of the economy and the financial markets. We just want to know what's going on in the charts and hopefully how we can best make money. So anyway, we're looking at this March 2025, big push up and then a correction. And what I've done on this chart here is go through and label where each of the lows have shown up with the Google Trends, looking at some significant turning points, albeit Some of these are going to be my choice of where the significant levels are. Like I'm looking at, say, November 2014. It's come off a significant low there. August 2014, a big move to the upside here. And then there are a few through this zone that you see in 2015, 2016, getting into 2018, that's December. And then also this one here in August 2019. But you can also easily, everyone would pick out these particular peaks as being quite significant in the search volume for recessions. So let's take a look at those on the chart. You can pretty well see that they line up with a lot of significant lows, barring a few of them. That's the first point. The second point is some of these occurred around peaks. And so you could ask the question, well, is this the beginning of the end? You know, is this the end of the cycle? Because the recession fears did pop up often. You had it in March 2007. You had it in January 2008. You had a couple of recession calls here in April and October of 2004. Interesting, those months came up again. If you're following your human emotions and human sentiment in the market, April, October, we had October in 2003, we had April in 2004, and we also had another time in October of this year. They were all the times when the Middle East conflicts came up. So that's a side note again, but you can see how these events continue to come up at regular intervals. You had the October 2022 low. So just in terms of these highest readings for recession in the Google Trends, this is what basically the world is searching, they are lining up with pretty significant lows, pretty significant higher lows, and it might not seem like it on the chart, but during the course of the market cycle, even if they don't look like significant points, say like this one here in August 2019, which was a significant reading here, you can see this massive, massive peak. Things were quite volatile at that time, leading into the peak before COVID as well. So that was the peak of COVID there, or the price on the charts, and then a massive dump. So you had this August period, a little bit of a push to the upside, correction, final leg up into that high, and then a major correction. So the feeling at the time was quite extreme, and it was eventually leading into that final collapse. So what can this tell us moving forward? Well, one, you have to agree or disagree. So you got to take your position on the market and your money here. Are we at this final area? And it's a place to be very, very cautious that the market is about to come undone and collapse, go into some sort of GFC? Or are you betting on the side that this is another buy the dip opportunity and that we are possibly somewhere around the low, if not getting close to it? Say 2022, you had peak search volume for recession in June, and then it went lower, slightly lower. The low there is at 36. Then you had the next low at 35. So it didn't go that much lower, but there was still a lower low after a bit of a rally. So are you on this camp that it is somewhere around a good entry opportunity for the market? But you got to be patient. June to October is still 4 months difference. Not saying that this has to be 4 months. The point I'm making is you just have to have some patience. If that's the case, then this could be a good area that you start to implement that on your plans. So the warning sign here is that the market is expecting recession, or they're searching for recession. The everyday person's been talking about it forever. The news is there, but time and time again, they miss out on some of the best buying opportunities, and they sort of wait way too long to get into these peaks. Now, of course, if you're on the side that, well, we're just leading into a final recession, final peak, and then into a major recession, but you don't want to miss out, well, there's still the opportunity to buy and put some stops in play at key levels underneath the market. So you got to identify those for yourself that you like. I've talked at length about some price areas that I'm looking for that I wouldn't want to see the market get below. These two are in particular, April low and August lows around 5,000, 5,100 points. And then obviously back here at 4,800 points being the previous all-time high. So if I did see the market go that far, that to me would say it's probably unlikely that we're going to see new all-time high prices and that this is the end of the line for the cycle. But I don't think that is where we currently sit. I think there is further upside. So if that's good news for Bitcoin, let's take a look at Bitcoin layered on top of the S&P 500. Now I'm using a line chart just to remove some of the noise. I'll take the swing indicator off as well so we can just look at the bar charts here. And if we wanted to make it even easier to look at, let's turn the bar charts into some lines as well. So basically the orange line is Bitcoin, orange for Bitcoin, the white line for the S&P 500. And around those lows, we're just taking a look at, is Bitcoin on the way up? Is it around a low? Is it a good time when the recession calls come up? And I mean, at a quick glance, you can essentially see these are the recession calls, or the peak of the recession calls. And I'm looking at the peaks because this is either a peak, and I just showed that with the last 5 years, right? You can see that peaked and it started to come back down on the search volume. Last week, everyone was looking at it, or the week before last, and now there is far less people searching for recession. Of course, this thing can flip around. You can see it just jump back higher like it did in 2022. But the point I made is that even though it went higher, or at least the, well, it was 1 point lower, double top, let's call it a double top. You had extreme recession calls at the same time. The price only went marginally lower on the S&P 500. For BTC at the time, that was in 2022, you had the June low, that was at about $20,000. And then the October price was at about $20,500. Sure, we had this, November and December. November was the FTX collapse, a couple of months to hold up, and then the price was back above both of those price points. So June and October, call it a rough number of 21,000. And by January, so really just 2 months after the October, 2 to 3 months, it was sitting at 23,000. So you're already up 15% from those prices. Okay, so looking forward on this, we can see the lows were at similar times. The canary in the coal mine here, here's another one. Bitcoin in each of these scenarios, and I've checked this out on charts before showing you the 4-year cycles, Bitcoin typically tops before the S&P 500. The simple reason I guess you could layer to that is it's a game of liquidity, and liquidity essentially dries up quicker. However, not in all cases, there's nothing that's 100% guaranteed, but it can be seen as a leading indicator to what happens next for the S&P 500. Let's take it back each cycle and have a look at this. We've got the recession calls, right? It looks like it's a reasonable time, if not probably within the next period or so. I'm looking at Q2 as an example, that we might see a lower low for the S&P, a high low, doesn't matter. We're looking at an area. We're not trying to pick the low. We're not trying to pick the exact top, just trying to find indicators that guide us in that direction, right? That are going to give us better risk and reward opportunities. So canary in the coal mine is going to be better seen with a line chart here. So let's go on to the weekly. Bitcoin topped December. The S&P 500 topped February. It had a top in December, a higher high in January, and then another higher high in February. Meanwhile, Bitcoin was fading here. Yes, Bitcoin did have an extra top in January, but I'm looking at the closing prices, and really the sentiment had died off tremendously by that stage. You had the peaks in December, and then it was basically just Trump's inauguration, and it was a shit show after that. So we got these lower highs for Bitcoin. Let's take it back even to March. March put in a top here. Basically, this was the price top. I think it's probably going to be better if we throw the bars on here so you can see the exact price. You're just going to have to have a look at the lines themselves, or the lines on the chart. White is Bitcoin, colored is S&P. It does get a little bit messier here, but as long as you can see the difference between the lines, the white being Bitcoin, you got the price top, BTC. The S&P 500 topped out a couple of weeks later. Bitcoin puts in a lower high. At the time, you don't think that it's possible, that it could mean that we're going to see a slowdown here. The S&P does continue to climb higher, but it's just not going anywhere too fast. It gets to that July-August area, or the July peak, and then we have the August collapse. Everything collapses into August. Lower high, higher low, beginning to grind higher again, and Bitcoin bottoms at the same time in this case. But as we take it back through previous cycles, you can see Bitcoin topping out just before the S&P 500, Bitcoin bottoming before the S&P 500, and both of them start to lead the charge together, taking it back again, barring this low for the S&P 500. We also had the June lows together. Bitcoin started to base. October low came in, November's with FTX, but then you get the March event. So this was the March event with the banking crisis. And Bitcoin bottoms first, charges away the next week, and of course it's trading on the weekends, whereas the S&P 500 can't trade on the weekends, or doesn't, I should say. They could, but they don't. Nonetheless, the S&P 500 bottoms that week, so Bitcoin's in front again. So as I said, it's not a 100% guarantee, but it's giving you some subtle signs, if not the exact sign telling you it's probably likely we're going to see some further upside here. Now I can take this back again. We've got the previous all-time highs for the 2021 cycle, Bitcoin topping, S&P 500 topping later. Obviously Bitcoin comes down, liquidity's getting flushed out left, right, and center. Bitcoin tops again, S&P 500 tops later again. Let's take it back to roughly around COVID times. You can see the S&P 500 topped the week after Bitcoin topped here, but of course Bitcoin's already in a lower high after going ballistic in June, which tells you, well, June's a high. And again, the S&P 500 topped in July. So the Bitcoin topped in June, S&P 500 topped in July, lower highs formed. Again, Bitcoin's telling you something earlier than the S&P 500. Colored lines here is S&P. Bitcoin is white. Bitcoin bottomed before the S&P 500 here. Again, it's telling you something sooner. Bitcoin topped in December 2017. The S&P 500 topped in January 2018. Okay, if you've stuck around through this, going through each of the back testing when it comes to Bitcoin and S&P, let me know. Hit the like button and let me know in the comments section. The reason I kept going through that, so I try to drill it in, maybe drill it into myself. Hopefully you're seeing the same thing, or you're seeing something different and you've got a valid point as to why this isn't working. But where I'm going with this is, if we are to see a Bitcoin low coming in based on probabilities, remember there are times that it's not 100%, but more often than not, if we start to see a Bitcoin low come in before the S&P 500, that might mean that we're going to see an S&P 500 low relatively soon and everything start to charge up together. So what do we have at the moment? We've got an S&P 500 low last week, and we have a Bitcoin low last week. Let's spread these out so we can see them. Here we go. So we got a Bitcoin and an S&P 500 low coming in last week. So still on track here together. And I'm interested to see what happens over March and into the first part of Q2. So of course that's, you could just say April and May, Jason, to see whether we do see a similar pattern repeating like we've seen throughout the past with Bitcoin and the S&P 500. If we start to get that low, higher low for Bitcoin, lower low, doesn't matter. But in terms of the timing, that's the important thing here. Do we start to see that? Bitcoin giving us that early warning sign that it's probably likely we're going to see a higher low form for the S&P and then start to see things charge up throughout 2025. That's what I've got my money on. Let me know in the comment section whether you think this game is completely over here, or if you're on that side of the hopium where we've seen the recession calls and the fading off here now of recession, which is in history lined up with other lows in the S&P 500. And if that's the case, well, then it seems like we've got further upside to go for the S&P 500, more on the 18-year cycle, everything continuing up higher here for 2025. Remember, there's still another 9 and a bit months to go left in the year. Wouldn't be writing it off just yet. Yeah, I'd love to hear your comments and questions in the comment section down below. Like, subscribe to the channel, and of course, links are in the video description. Check out TIA Premium, more on this stuff with the membership. All right, guys, I'll see you in the next video. Until then, take care. Peace out.